Hello everyone. Good afternoon. Depending on where you are joining us from, good morning to some of you and good evening to others. Welcome to the second day of our second edition of the RegTech Live event, a joint event between ourselves and the Difc Authority. I'm Vandana Kothari, Senior Manager in the FinTech Supervision team of the DFSA, and I will be responsible for steering you through today's program. After some very interesting discussions yesterday on the role of technology in regulatory compliance space, today's agenda will focus on the digital journey that the DFSA, DIFC, and the overall UAE is going through. Today's program, as you will see on your screen, will run for 2.5 hours. We will start with our keynote speaker, Meta Al-Balushi from Smart Dubai, who will talk on digital transformation in the UAE. Keynote speech will be followed by a panel discussion on mitigating risks and payments, followed by demonstrations from two RegTech providers, Synopsys and DX Compliance. Discussions in the second half will focus on the topic DIFC Authority, DFSA, and the future of finance. We will finish up with a few closing remarks from Justin Baldacano from the DFSA. If you have questions or comments as we go along, please feel free to type them in the question box. If you're on a laptop, it will be on the right-hand side of your screen, and if you're logged on from a mobile device, it will be in the bottom tray. With over 300 people registered for this event, we might not be able to get to everyone's questions, but we will try our best to answer as many as we can. At the end of the event, we have few survey questions. We request you to please respond to those. These questions are pertaining to today's events, and answers to those will help us shape this event in future. Not taking any more of your time, I would like to kick off today's event by inviting our keynote speaker, Meta Al-Balushi of Smart Dubai. Meta, if you can kindly come online and introduce yourself.
Hi, good afternoon, everyone. If you just allow me to share the screen. Yeah.
Meta, if you can kindly switch on your webcam as well.
Yeah, wait a minute. I'm trying to do it. Can you see me?
Yes, I can see you. Great.
Okay. So I'm going to share my screen with you so I can start with this.
Great, we can see your screen.
Can you see my screen?
Yes, we can.
Okay, great. So let me start. So welcome to UAE Pass session, which is the UAE Pass First Unified Digital Identity. My name is Meta Al-Balushi, an e-service provisioning officer in Smart Dubai and a member in UAE Pass team who's leading the onboarding for the UAE Pass. So in today's session, I will provide an introduction of UAE Pass journey, the key features. Yeah, I'm going to provide an introduction about the UAE Pass journey, the key feature and the capability of the solution, the user journey in terms of the registration. Okay, great. So sorry, I'm losing my focus on the what's showing in the screen. So user journey in terms of registration, step and profile level, and the last thing, how UAE Pass can help you to go paperless. So let me start with the strategic overview of the UAE Pass. So the UAE Pass, during the annual government meeting that took place in September 2017, with the more than 30 vital sectors between economy, power, health, environment, and the smart services, a unified digital identity was the common interest between the ministries and our higher directors, a demand to provide a single trusted digital identity for all the citizens and the residents as well as the visitors. The annual meetings provide a platform to work closely work with the federal and the local government to have a collaboration that leads to a successful and high adoption and utilization of the UAE Pass. So the UAE Pass was one of the main initiatives that was announced during the UAE annual meetings to lead to have the vision of the UAE Vision 2021 and the sustainable development. So when His Highness, sorry, just a minute. Okay. Okay, when His Highness Sheikh Hamdan Sheikh Hamdan bin Mohammed Al Maktoum, Crown Prince of Dubai, say that Dubai government will issue its last paper transaction in 2021. We have glad to be the Smart Dubai to oversee this goal and work with other government entities to help us to achieve to achieve this strategy by 2021. This is when it came in October 2017, Smart Dubai signed an MOU with TRA to develop a single trusted digital identity solution within the UAE. And in 2018, UAE Pass has officially launched in Difc 2018. Okay, sorry. Yeah, sorry. So in 2018, UiPath has officially launched in just 2018. This service is a four-day collaboration between Smart Dubai, TRA, and Abu Dhabi Digital Authority with the aim to provide a single trusted digital identity solution for the entities and citizens, as well as the residents in the UAE, while maintaining a seamless experience and a high level of security assurance within this solution. So, soon enough, with our strategic partner that help us to increase the adoption in terms of the veteran and local collaboration across all the 7 Emirates. With the past 2 years, the UAE path has gained, and also with the main issue, like for example, I can give an example of the Fujairah e-government smart smart government, as well as the Sharjah and Ajman. Also with the main issue that we have with the ICA, Dubai Electronic Desk, that help us also to set the policy and the regulator that help us to increase the adoption and have the UE pass sit within the 7 Emirates. So with this number and the collaboration between the government entity within the past 2 years, with the UAE pass gained the trust of the government and the private entity. As of today, we have more than integrated with more than 100 service providers using different features of the UAE pass. And the UAE pass itself provide a single access to more than 210 channels that varies between the portal or the mobile application. And as we speak now, we have more than 800,000 users registered within the UAE pass. So what is the UAE pass? So UAE pass is the first digital identity for all the citizens, residents, and visitors, allowing them to access various government services across different sectors within the UAE. Also, digitally sign and verify the document. In addition, provide the ability to share those documents within within different entities. So the initiatives aim to contribute to overall the digital economy of the UAE, reduce the center visits, and enhance the online user journey, increase the happiness rate, and encourage the international visitors who easily explore opportunities and avail the service on a click of button. Moving to the main product feature of the UAE Pass. So in the UAE Pass, we have three main features. It's included, it's summarized, and the first one is the authentication. With the authentication, UAE Pass itself is a mobile-based authentication. So your identity is within your mobile. It's allowing the user to access, as I say earlier, the various government service by any federal or local entities through one application. So there is no need to remember like multiple username and password anymore. You can rely on a single identity that allow you to access those services. Also, as you register with the UAE Pass, you can log in using one of the identifier that you are using while you are creating the account, such as an email or mobile number or Emirates ID number. And for the password, as I say, it's a passwordless. So in the mobile itself, if you are the Face ID authentication, which is provided in the smartphone, that enable you to easily access and authenticate yourself by the Face ID. And in addition, the UAE Pass is built on the national PKI public key infrastructure that is provided by our main issuer, which is by electronic disc and the ICA. Moving to the second feature, which is digital signature. The digital signature allows the user to digitally sign the document either through using the mobile application of the UAE Pass or the UAE Pass platform. So as a user, you can upload the document that you want to sign it, select the placeholder, and then sign it using the UAE Pass. So with the UAE Pass, you can easily sign any document through the digital signature that's provided within the UAE Pass application through one click. Also, besides the the capability to sign the document, you can also verify whether this document is signed by the UAE Pass or not by an option that's provided through the application, or as well as the Silk-Care portal, which is you can upload the document and it will give you all the details about the list of signatories, when this document is signed, and who are the signers, all those details that validate that this document is signed by the UAE Pass. In addition to the digital signature, the signature is legally aligned with the federal law on electronic e-commerce and transactions. Moving to the third feature, which is the document vault or the digital vault. The digital vault is a feature, is the data and the document and document sharing is a feature that's provided within the UAE Pass that's allowing the user to share a personal identification document in a secure platform. Here I want to pause and show you an example of this feature that is integrated with Al-Ansari Exchange. If you just allow me, I'm gonna share the video with you. Can you see my screen?
Currently it's all blank, but it's coming up.
Okay. So we'll go back to the presentation. So to summarize,
Simon and Joe both invest in stocks. Simon uses eToro to invest in stocks without
sorry.
paying commission.
So to summarize the on-file exchange use case, so on-file exchange has been integrated with the digital vault that using the UAE pass. So if you are as a user would like to create an account with the on-file exchange and you already have a UAE pass account, there is no need to visit their main branch because you can raise the request within their mobile application and you will receive a notification as a user that you are allowing to share those required documents to open an account, such as an email ID or the passport. So if you are allowing to share it with them, and with the one click, you can share it with them, and then they can proceed with opening an account with for you as a customer and client without the need to visit their main branches, which is providing the seamless experience for their client and customers to open an account and at any place and whenever they want it. So moving now to the user profile level. So as a user, we have three main profiles for the users. We have basic, verify, and advanced verify. The basic profile, it will be like as a user, you are only downloading the application. You are registered with your mobile number and email, but without any verification or authentication for your additional for your additional attributes and for your additional information. So this having a basic account, it might allow you to access a couple of government services if they are allowing a basic account to use their services. The second one will be the verify profile. If you already have an account with Dubai ID or Smart Pass, there is an option within the application that you can upgrade your account from the Dubai ID or Smart Pass to the UAE Pass in a seamless experience, which is which can give you a verify account that's allowing you to use the authentication and the advanced signatures. For the advanced verify account, in order to upgrade your account from basic and verify to the advanced verify, you have to visit one of the kiosks that's distributed within the UAE for only for one time for the biometric verification and creating your passport that you're going to use for the digital signatures. And once you finish this step, you're going to upgrade your account to the advanced verify, which is allowing you to use all the capability and the feature of the UAE Pass. Just to highlight one point here, currently we are depending on the user to visit those sites to upgrade his account. However, we are in the process of launching a new feature which is allowing the user to digitally upgrade his account using the Face ID. And this feature will be launched soon, which is allowing the user to complete all the registration at one time within the application itself, which will eliminate his need to visit those kiosks. So now I'm going to cover the user journey in terms of the registration part. So as a user, you need to download first the application through it's available in the Apple Store and the Google Play. Once you register, you press in the create account. You need to scan your email ID, verify, enter your mobile number and email, and verify through the OTP. And then you can create, you have to create the PIN. And once you finish this step, you're gonna create only the basic account. And as I mentioned earlier, if you already have a if you already have a Dubai ID or Smart Pass, you can upgrade it through this option that's available within the application to upgrade your account from the Dubai ID or Smart Pass to the UAE Pass. And to have the advanced verify account, you can click to this option that will give you the nearby kiosk within your location to help you to upgrade your account and verify it through the visit of the nearest kiosk within your location. This is type of the kiosk that you can see is that's distributed within the UAE, and as I mentioned, it will give you like the nearest kiosk based on your location within the application itself. For the self-care portal or the UAE Pass portal, you can find additional information about the UAE Pass. Also, the list of the service provider that's already integrated within the UAE Pass. Also, you can log in and see your profile and the activity that you have been done using the UAE Pass account. Moving to the last and important point about the UAE Pass, how it can help you to go paperless. So with the UAE Pass, if you are collaborated and integrated within the UAE Pass, first you can replace all your web signature process within the UAE Pass digital signature, which is eliminate the need to print out the document and reduce the number of paper needed for the web signature. The second thing is provide an identity authentication mechanism for your services. And the third part is replace the blue stamp with electronic e-stamp e-seal. So in addition to the digital signatures that we are providing for the companies and the and organization, if you are today using a blue stamp, we can provide also an API that will develop for you as a company or authorization an electronic stamp that you can electronically stamp those documents without the need to print out those documents. So moving now to the last part, how can UAE Pass enable the paperless? As a UAE Pass onboarding team, we can you can get in touch with us. We can identify the requirement, agree on the scope and the use case of your integration, and then we're gonna share with you the toolkit and the form that you need to fill it in order to initiate the onboarding process, and then we're gonna help you and support you to implement and be part of our paperless journey and help us to achieve this strategy by 2021. So now we'll leave the floor for any additional questions that might be from the audience.
Yeah, thank you so much, Meta, for the presentation. I do have a few questions from the audience. The first one being, will the UAE Pass replace the need for physical ID documentation to conduct KYC? If so, what kind of time frame will this transition occur in?
So currently for the UAE Pass, we are moving from in a basis. So as when it's first launched, we are only collaborating with the government to adopt these options and to integrate it within their services. And then last year in Difc, we opened the door for the private entity also to be part of our journey within the UAE Pass. So we are moving in the phases in order to make the solution itself for the user familiar to be with this solution. And moving forward, we will mandate and make sure that UAE Pass will be the only login mechanism and the digital identity that's used across all the UAE.
All right. Thank you, Meta. There's another question, but I think you've already answered that with respect to how it will be getting rolled out to more organizations in the UAE.
You mean the process for the question? What are the process? Or?
So you mentioned the current partners in the presentation, and we just wanted to understand how the UAE Pass will get rolled out to more private other organizations.
Yeah, so in the self-care portal, we have something called developer tool, where many entities, especially for the private, are reaching out to us through this developer tool, and we are receiving their requests, having a meeting with them to identify their use case and make sure that the UAE Pass is adding value to their services. And then when we see like this and they meet the requirement, we initiate the onboarding and we support them to integrate within the UAE Pass features, which is authentication or digital signature or the digital vault.
All right. Thank you so much, Meta. Thank you for the presentation. We at the FSA have definitely seen traction in a lot of our firms being interested in UAE Pass for onboarding purposes.
Yeah. Thank you. It's really my pleasure to be part of this webinar and to present the UAE Pass from Smart Dubai side.
Thank you once again.
Thank you.
Mitigating Risks in Payments, which will be moderated by Christian Kunz, who is the Vice President of Strategy with the IFC Authority. Christian will be joined by Ava Hill from Synopsys Solutions, David Rich from Mastercard, Nandini Bhattacharya from ICICI Bank, and Simon Dix from DX Compliance. Christian, over to you.
Thank you very much, Vandana. And I ask all the panel participants to reveal themselves. Great. So hi, everybody. My name is Christian Kunz. I'm the Head of Group Strategy and Innovation at the DFC Authority. I'm delighted to be moderating this panel today on a topic that is really of very high interest to me, and I'm sure to many of the audience, which is mitigating risks in payments. It's a topic as important for incumbent financial institutions as it is for the next generation fintech companies. And that's why I'm very excited about the panel participants today who have significant experience across both areas and are absolute experts in this area and will bring a very unique and complementary perspective on the topic. Before we get started, I will ask each of the panel participants to shortly introduce themselves. And then we will deep dive into the topic itself, and we will leave a few minutes at the end for questions from the audience. So let's get started. Maybe let's start with Avir. Can you please introduce yourself?
Yeah, sure. Thanks, Christian. Hello, everybody. My name is Ava Hill, and I'm the co-founder of Synopsys Solutions. Synopsys is a B2B regulatory technology company that was founded in Singapore in 2014. Just a bit of very quick background on myself. I had a 25-year investment banking career and just knew there had to be a better way to onboard clients, and that's why we came up with Synopsys, and it's a pleasure to be here today. Thank you.
Thank you, Avir. David, you want to introduce yourself?
Yes, thanks, Christian, and hello, everybody. It's I can't see you, but hopefully you can see me and hear me okay. I head up services for our real-time payments area in Mastercard, and that includes mitigating financial crimes. And by financial crimes, we're talking about preventing fraud and preventing money laundering and tracing the proceeds of financial crime and money laundering within a bank and between banks. And we do that through the application of artificial intelligence and machine learning that can be applied either in country or in a number of different sort of scenarios. Thanks.
Great to have you on the panel. And maybe let's go next with Nandini. Nandini, we just lost your video. I think you have to unmute yourself.
Yeah, hi. Very happy to be here today. I am Nandini, and I look at trade products for ICICI Bank. ICICI Bank is a bank headquartered in India. We are a systemically important bank, and we are the second largest, bank in the entire country. So again, once again, happy to be here.
Great, thank you, Nandini. And Simon.
Yeah, hi, thanks. Happy to be here. Simon Dix, co-founder and CEO of DX Compliance. We really focus on anti-money laundering, transactions monitoring technology. Very close to my heart, as I previously spent a lot of time as MLRO and head of ML and compliance for a couple of banks in Europe. So happy to be here and get stuck in.
Great. Oh, great to have all of you here. I will start deep diving a little bit on the topic. I'll do it one by one with very focused questions. Let me start with Nandini, with you. As you mentioned, ICICI as the leading private sector bank, second largest bank in India. You're the head of trade products, and I'm sure payments are essential for your business. I have two questions for you. One, what are the biggest risks you see in your business in terms of payments, and how do you deal with them? And how do you find the balance, secondly, between mitigating those risks and still remaining relevant, innovative for your customers?
Okay, that's quite a lot of questions. So, you know what? Correspondent banking in terms of trade and payments is obviously very critical. The whole global financial network framework, whether it's corporate, institutional, or individual, sits on the correspondent banking framework. And customers in one bank, in one jurisdiction, utilize banking services of another bank in a different jurisdiction. So millions of banking services are conducted today across the world on a daily basis based on this arrangement. However, this brings into the system a vulnerability, an exploitation by potential money launderers, terrorist financiers, fraudsters, the corrupt tax evaders, and sanction breachers. It is the correspondent bank which decides, what relationship it will drive in terms of its customer base. And the correspondent bank today has no direct relationship with the underlying parties to a transaction. So core banks are not in a position to verify identities or conduct the necessary due diligence upfront. And it tends to rely on the controls and the due diligence checks of the original bank. And depending upon the level of governance, etc., you may be okay with that risk or you may not be okay with the risk. There can be inadequate governance of beneficial owners or not establishing the source of funds. So if a core bank decides only to rely on the risk framework put in place by the client bank, I think it leaves itself vulnerable to becoming implicated by association if anything goes wrong. And that can be regulatory fines, reputational damage, loss of share price, restrictions on activity, negative media, blah, blah, blah. So I think it is very critical to understand these risks and put in mitigants. In terms of mitigants, I would think, obviously, follow the best practices in terms of AML, KYC regulations, updated, have a strong pattern analysis team in the bank who will analyze the payment patterns and come up with, different typologies. Wolfsburg correspondent banking due diligence is just beginning, right? You have to dig deeper. And there's a whole lot of regulatory tech initiatives that are being brought in by fintechs to strengthen the regulatory compliance. I think all these put together will work to mitigate these risks in some form or the other. Of course, being alert and knowing the bank and its customers, the more you do it, the better it is. Now, in business, we always, whenever we hear of risk management control, we think, how will it impact my business? How will it affect the customers, and how do I still remain relevant? The example I would give is, if today we do unlimited business with a correspondent bank, which is not so, regulatorily or money laundering wise savvy in terms of the compliance angle, at some point of time, we will have to shut that service to that bank. And that anyway is loss of business, loss of undesirable business. So it is better to choose the client banks carefully, keeping updated on the industry trends. See, banks today continue to shape policy framework, right? And they work towards an environment through technology, innovation, and meet customer service levels. A lot of regulators today have industry sandboxes for best-in-class innovation. It is important as large banks, we participate in those, put in inputs and drive policy and build frameworks which will keep the banking system protected against all these risks. If we collaborate across all players, be it the regulators, policymakers, incumbents, startups, and we can unlock a lot of opportunity that comes in through advanced data analytics to initiate and extend the customer service innovations. In terms of payment, what does a customer want? The customer wants his payment to go through seamlessly. He wants the beneficiary to receive it, and he would ideally like to see when the beneficiary has received it. So globally, I think SWIFT has rolled out its GPI initiative, where you can see exactly at what stage the customer payment is in. If he logs into the bank site, he can see, I have initiated a payment 2 days ago or 1 day ago. It has gone through a maze of 2 correspondents, and now it is sitting in my beneficiary's bank, or it has reached the beneficiary. I think that is the assurance customers look for in payments. One, quick, fast, and accurate. So those things I think are happening, and a lot of collaboration is happening between regulators, different bankers, in terms of ensuring that we keep on bringing the edge of innovation to customers while mitigating the risks.
Thank you, Nandini. This was very interesting. I think it opened up sort of the conversation to lots of different pathways. But I would like to continue with Simon because it was one part of the earlier part of your response. So DX compliance is an AML transaction monitoring service. I know you have operations in Ireland and Germany and other European countries. You're in our DFC Hive Accelerator at the moment, so you're collaborating also with the ecosystem, with the banks, with the regulator, with the DFC authority, with our Hive Accelerator. In your perspective and in your experience, how does transaction monitoring help to mitigate risks in cross-border payments, and how do different jurisdictions approach this? What's your experience? What have you seen?
Yeah, so I think one of the biggest issues on the cross-border area is not necessarily having a clear understanding of either where that money may be coming from or going to, and from not necessarily having a clear understanding of the compliance requirements in the sending or receiving jurisdiction. There are as well, I would say, not just within institutions but also within countries, within different regions, very I would say quite widely differing changes within that can cause issues. Interestingly, though, one of the biggest issues that we see, and one of the biggest issues that actually comes up, is not so much the jurisdiction changes, which often will relate to things like the way a risk review is conducted, or the way, in fact, that risk is expected to be measured, and potentially a few thresholds. One of the biggest issues we actually see is almost the lack of many systems to actually fully incorporate the underlying risk review of any given company, and you always get this kind of disconnect between the high level sort of risk review and assessments that are being run at a group level, and then that's often then based on things like FATF and on Wolfsburg reports, but actually isn't really making it over into the monitoring systems of the individual institutions. And that is actually something that we often see as being a bigger challenge, and something which is being presented to us on a very regular basis. Because if you can't get those underlying points right, and you can't actually make those adjustments to risk in the system, then you may be telling the regulator on a regular basis that this is the theory, this is what we're monitoring, and this is how we're controlling and mitigating all of those risks. But actually the evidence that you're supporting it with shows gaps in that, despite your best efforts and despite huge teams. And that's something which really is quite a struggle. The other thing which we often see is, particularly when we're working with more sensitive jurisdictions, is needing very many instances and different types of instances within one organization, wanting to almost share as much information as possible, but then actually specific jurisdictions, Switzerland being the perfect example, not wanting anybody outside the country, even if it's a relatively high level employee in a different jurisdiction, to be able to see anything within that system. And they may be screaming for that insight on the other side. So we really come across some interesting challenges there, but it's I would say really starts with a deep understanding of that risk and an ability to mitigate those measures.
Great, thank you. David, I read somewhere, and the number might be wrong, but Mastercard is processing over 70 billion payment transactions per year, and we know payments is one of the fastest growing sectors within financial services. How do you identify these risks, and how do you mitigate these risks at such large scale and global business?
Yeah, thanks for that. And it's interesting because the speed and the increase in the number of transactions not involving cash is only increasing across the board. And we process, billions of card transactions, and we actually issue with our partner banks, obviously, billions of cards. And we also have we process 9 billion transactions in the banking industry in the UK through our partners in Pay UK. And we do it in other jurisdictions as well. So it's not just the card transactions. We also process 95% of all the batch and faster payments in the United Kingdom and numerous other countries. And when we're talking about mitigating risks, what we're really talking about here is fraudsters, criminals of various types, organised crime, who are very, very sophisticated, and they work very quickly. And when I say quickly, they work quickly to figure out whatever your defence is in your financial institution, they work out what that is, and then they try to create an attack to play against your defenses. And once they achieve that, and unfortunately for all of us, excuse me, they're achieving that faster and faster, and there's about $2.5 trillion of money laundering washing through the global financial system, and that's only increasing. And the banks are facing significant hundreds of billions of dollars of fines per year for lack of compliance. Once the money is being captured through whatever means, whether it's retail fraud or corporate fraud or check fraud in various countries and different types of fraud or whatever it may be, the money moves unbelievably quickly. And when I say quickly, we see all the take the United Kingdom, for example. We see the transactions between the bank accounts, and we can identify with our partner banks, a suspect origination of the funds, and then we can trace that through the banking system. The speed at which it goes through the banking system once money is being captured is in seconds. It's not in minutes, it's not in days, it's not in hours, it's literally in seconds. They'll take a transaction, split it 20 different ways to 20 different bank accounts in about 20 seconds, 30 seconds. And that's what, with the ubiquity of faster payments and real-time payments and real-time gross settlement and finality of settlement, which have a tremendous benefit to global finance, to consumers, to businesses, and certainly a direction we want to go, to mitigate the risks associated with that, cannot rely on a rules-based approach, can't rely on the processes that most financial institutions go through, which is a crime is committed somehow or a suspect account is in play, and then someone reports that, then they review it, and there's nothing wrong with doing any of that. That still needs to be done. But the speed and the sophistication with which organizations, criminal entities globally, and not just in one jurisdiction, where they look at attacks against a country, they look at attacks against an institution, against a retailer or a merchant, or any combination thereof of consumers, happens with increasing sophistication. And the only way to fight that is with increasing sophistication. And that really is, the only way to do that is through looking at the data, ingesting a significant amount of data operationally, which of course Mastercard does, and then looking and applying artificial intelligence, excuse me, to those transactions and some machine learning. And the great thing about, well, not the great thing, but with financial crime, we have a number of really critical ingredients into determining financial intelligence and mitigating crime through volume of data, which we see, the structure of the data. So payment data is very structured. So ISO 8583, 20022, various flavors thereof. And we know what the problem is. And the problem is we want to stop fraud, we want to stop money laundering. And through the application of artificial intelligence and machine learning that sits underneath these transactions in country, on-prem, between countries, because obviously we process a lot of cross-border transactions. We work with various entities to do that. We have our own cross-border solutions. That's really the only way to fight the ever increasingly sophisticated attacks that we all see. And that's not going to go away. That's only going to increase. And so having a response that can adapt at the speed that our criminals are operating at, and being able to advise financial institutions and participants in the financial landscape that these things are occurring, so that they can be forewarned and forearmed and get as ahead of the cycle in real time as we can, is the best possible way of mitigating financial crime.
Thank you, David. Avir, just building on what David said and what we heard before. Synopsys, as he mentioned, is an end-to-end onboarding platform for financial institutions, enabling eKYC, eKYB, enhanced customer due diligence, enhancing of data, transaction monitoring. It's an end-to-end solution. You were founded in 2014. You have over 1,600 clients across 28 jurisdictions. You have a lot of experience from that side. Building on the conversations we had, at the speed how things are going and the risks we're seeing in context of payments, why basically banks have to adopt new technologies that are AI driven, that are smarter and faster to mitigate those risks. What are you seeing in terms of adoption by banks? It seems like a no-brainer. How fast is it really going? What are the challenges?
Yeah, it's a very interesting question, actually. And I've had the advantage of operating in many different jurisdictions around the world. I was a banker myself for 25 years. So I have some first-hand knowledge and experience of the decision-making that goes on. And senior management within banks tends to be very, very conservative, okay, especially when it comes to technology. Of that client base that you shared with the audience, we have much more traction within the fintech space because they're much more open and don't have, I think basically the problem is the legacy infrastructure that a lot of these banks have. You know, when I was, and the bank I worked for will remain nameless, but it was operating systems that were 15, 20 years old at that time. And what they tended to do was, rather than have a complete review and rip out of the old legacy systems, they would patch and build on top and things like that, okay? So there's the conservative nature, the legacy systems, but actually, and through participating in the DIFC FinTech Hive Accelerator Program, it's afforded me the opportunity to meet with a large number of senior people in financial crime in the local market to see and understand where their thinking is. And they, as David said, are facing all those same issues. And it's compounded, if you like, by the fact, and this is what Nadine mentioned, that the user experience is driving the speed of change at the front end, and at the back end, they're struggling a little bit. Okay. So what I'm seeing now is the right conversations on the right topics, and they're looking very much at, instead of ex post review, it's moving to, if they can, ex ante, using AI and ML. We're also seeing what I'll term as dynamic transaction monitoring, so that it needs to be real-time, immediate, but feed back into the risk assessments that Simon was mentioning. But what they don't want to do is take away all their legacy systems and replace them. What they're looking for is a thin layer of technology that can be applied in there to provide those solutions. So the banks have, and have always been, they want to be leading edge, not bleeding edge, should we say, okay? But from what, certainly in the UAE and the broader GCC, there's the right conversations are happening, and they're focusing in on the topics that in Europe and in Asia, because we're founded in Singapore, that those regulators, banks are having.
Great. Thank you, Nadine. I'm not sure if you're still with us. We lost your video because my next question was actually for you. Here you are. Wonderful. We can't actually hear you at the moment.
Can you hear me?
Yes, now we hear you well.
Yeah. Okay.
Welcome back. I think so. I wanted actually now to ask you another question in this conversation, also on building sort of on what Avir said. On one side, I assume, and then what you said earlier, it's very important for financial institutions like ICICI to be flexible, adaptable, to be able to adopt new technologies. There are challenges connected with that. How do you think about partnerships with fintechs? How do you approach kind of working with those new solutions, and does that really enable flexibility, or does that make it more difficult for you?
So I guess in terms of being flexible, innovative, The answer cannot be anything but it is very important. The rise of fintechs in the last decade and the millions of customers they have attracted away from the mainstream FIs has kind of changed the landscape for banks. In India, at least, the fintechs are changing the corporate landscape in multiple industries, reinventing the way companies gain access to finance, especially in the small and the MSME sector. And I think innovation is no longer optional, it is hygiene. So the good news is that there is no shortage of innovative ideas and options for banks today and FIs in terms of offering to their clients. You have the digital wallets, the P2P payments, the card controls, loyalty reward points, and whatever you want. Organizations need to innovate, otherwise we will never survive in the long run, and I don't think we need a webinar to understand that. But no matter how good the ideas are, if the bank or the FI cannot get them to market quickly enough, we will face a disadvantage. Customers are just not patient about getting what they want and when they want it. And if a bank lacks the infrastructure to respond to the changes in real time, it really risks losing its customers to a more flexible FI or a fintech. The payment and the landscape in terms of banking is facing major disruptions. You have players who are offering semi or parabanking services. You have brokerages which are claiming to have zero brokerage, and this disruption is here to stay. The bottom line is every FI needs to be ready, and for that, apart from technological ability, we need an agility in terms of flexibility and quick to market. So in the post-pandemic recovery phase, as we are seeing, businesses are far more cost conscious. The cross-border payments must offer compelling cost propositions to companies, or the traffic will be lost. In this context, the digital disruption brought about by the B2B payment ecosystem is now more important than ever. As I said, what does a customer need? A customer needs to get his payment done quickly. He needs to get a optimum charge because banks still need to charge him, and he needs his beneficiary to see the money and cite the money fast. So the faster we are able to do this and painlessly we offer it to the customers, the better it is. So for companies or for individuals, I think banks and FIs will need to be absolutely on the edge in terms of innovation, optimal processes, cost, because as I said, there are many players who are coming in and saying, make your remittances free. And there are fintechs who are burning money. So, as I said, disruption is here to stay. And the only way we can work at it is either get into a partnership or have a good platform where customers are attracted, because the legacy style of going to a bank and requesting payments to be done is really a little bit of history, I think. Thank you, Christian.
Thank you, Nandini. Simon, like in this context, what are sort of the solutions that are most popular for your customers in this context?
Yeah, I think one of the most interesting things, and it's interesting as well, touching on the cost effectiveness of the payments, as Nandini just mentioned, one of the biggest things we see, particularly I would say with fintechs in a fast-growing space, is a clear understanding of the cost that may be involved in integrating a system, but not necessarily quite so far developed in understanding the deeper costs that they have in the back office and middle office of an organization. So actually a struggle in understanding how potentially a more efficient sort of risk solution or a more efficient compliance solution, and something such as our own, can actually reduce the costs overall for their organization and help them grow and develop across those. So that's something that we see on a regular basis. I think one of the most interesting things, though, that we see, or two of the biggest things we currently see being really popular on the market are, one, what we would refer to internally as our kind of detective module, and that's very much about uncovering the risk and criminal activity that you're not actively looking for. Yeah, so before I mentioned that kind of risk-based approach and make sure we've integrated that, there's a huge amount of risk that needs to be assessed that you may not be actively looking for, and that could be, for example, a new pattern emerging, a new payment emerging, or could indeed be, customer A who has been the subject of a suspicious activity report, and for whatever reason, none of their network have been assessed. Yeah, and actually being able to highlight that network in real time and show where those risks actually lie is really vital to being able to mitigate the risk. The other thing, of course, is I would say the output of any systems in place. So we utilize machine learning, we utilize AI, we do the rest of it, and that's all very well and good. But if we don't provide the right outputs to our clients in terms of reporting that they can actually make use of at a granular level and actually pull apart things and understand for themselves, what do we need to improve? Where is the weakest link in our chain at the moment? Is there a specific demographic, specific product, or specific jurisdiction that is actually causing the majority of our headache in this team? Then they're very ill set up from the beginning to be able to improve. And those things are, I would say, almost flying off the shelf at the moment. We've noticed in the past sort of 12 to 18 months, especially, that kind of change of focus from, let's look towards big names and big players to an understanding, for many of the reasons that Nandini also mentioned, to a sort of understanding and focus on sort of best in breed style solutions, and going for smaller and I would say more agile organizations. And that cooperation is actually absolutely vital. Without that, we don't really push forward.
Thank you, Simon. In this context, what I'm hearing so far, on one side, you need to be very fast on innovation, because the fraudsters are very fast. New patterns, emerge. So big financial institutions are relying on new fintech companies to support them, and maybe also in kind of not only the new ones, also like existing established ones. So there is always the need to kind of get faster, get better, and work with partners. Now, David, in this context, new risks emerge again. So we saw this week a consultation from the Financial Stability Board on regulatory and supervisory issues relating to outsourcing and third-party relationships. Do you have a view on the challenges, maybe either from your own experience or seeing and working with a lot of the banks and fintechs in this context?
Yeah, thanks. So unfortunately for us, if we're talking about risk, the people who are trying to attack us are organized amongst themselves, between themselves, and globally, as I mentioned, in ever increasing ways. So in order to respond as an individual institution, that institution could be limiting itself because it takes a village. It's not really one institution and another institution and a third institution trying to fight off these attacks, because the attacks are against multiple institutions simultaneously. So the need to partner is evident, particularly if we want to innovate very, very quickly and be agile. But we also need to be cognizant of what Ava and Nandini mentioned earlier, which is that there's a lot of in situ investment that has gone into existing systems, existing processes, people, and we need to keep that, and that needs to stay there. So whatever we're partnering with, it needs to be ingested in a manner and digested actually by the financial institution in a way that's compatible and copacetic with the investments they've already made. So one of the platforms that we put out is an API accessible platform. So we do the scoring. The key here, to Simon's point, is the quality of the output. We have to drive down, false positives, higher value detection rates. We have to be able to look through the needle in a haystack. There are billions and billions of transactions. It's only the one or two amazingly bizarre transactions that sometimes escape that we've got to capture. On the corporate side and on the consumer side, it's another ball game altogether. And so those scores need to be validated, and 67% of the time we get that validation coming back from our financial institutions as to whether our scores were on the mark or not on the mark, etc. So we can recalibrate in the machine learning sort of algorithms. But the APIs allow an organization not to inherit the underlying risk of taking a partner behind their firewall and installing software, hardware, and whatever it may be. And there's all sorts of risks there. There's operational risk, there's execution risk, there's financial risk, there's a lot of risks. But if I've already invested a lot of money in a lot of fraud, compliance, money laundering, risk sort of capabilities in my financial institution, to be able to take a signal, a data point, a score in through an API and ingest that into my existing operational construct, then I'll be able to take advantage of the agility and innovation of the fintechs without necessarily taking all the risks. But it does move the banks a bit more towards a slightly different mindset. For example, we produce scores against transactions and accounts that are for £1 or $1.20. And in a lot of rule-based fraud systems and so on, they'll have a cutoff, for example, of if it's below $500, if it's below 500 units, we're going to ignore it. So when we started a few years ago sending in an AI-generated score that says this account, this transaction, is a money laundering account or it's a fraud or whatever it may be, it often went to the bottom of the queue in the when it was integrated into the existing systems because it was rule-based. So after we started, through our advisory group, we run a very considerable sort of advisory capacity in Mastercard to help institutions understand the signals and the insights that we're providing so that they can then figure out how to ingest a $1.20 signal, which will lead to a $20,000 fraud or a money laundering, several series of money laundering transactions go through. So I think the ability to ingest or onboard, if you like, fintechs and their innovative capabilities and whilst mitigating the risk is through API calls and through understanding the insights that those organizations are generating and then be able to operationalize those. In some cases, in Mastercard on the card rails, our financial institutions have asked us to stand in and stop a transaction. So if it's a consumer-based transaction on a credit card and we think it's a fraud, and the financial institution has agreed, yeah, well, if you detect that because we trust your signals so much, that do feel free to step in and stop that transaction. And we need to move to that space in the banking world as well, but it's always up to the financial institution. So I think there's a lot of aspects in there, but you can take on fintechs without necessarily taking on their underlying risk.
Great. Thank you, David. There's a few questions that came in. We have 5 more minutes. The first one up here, I think is one that actually suits you quite well. It's a question that is saying, apart from AI that is changing the way to monitor business transaction and payments, do you see banks are also looking to improve their internal processes through digital transformation and process automation?
Yes, very much so. You're seeing the two catalysts, in my opinion. You're seeing the regulators in many markets. They're basically a RegTech such as myself. They're one of the biggest champions that exists for us because there is no real international accreditation for fintech stroke RegTech right now. There's the ISO 27001 security type stuff that we have, sure. But the fact that the regulators are seeking to promote the capabilities to improve the ecosystem is an extremely positive factor. And I'm seeing that in many different jurisdictions around the world. And there's no getting away from it, as unfortunate as it is, but the COVID pandemic has acted as a real catalyst. The logic and the thoughts and the ideas are sound, okay? But the digitization journey wasn't necessarily the top priority for organizations. However, given the new world in which we are operating in, we're seeing it just rise rapidly up the prioritization list. And what we're seeing is that instead of just talking about it, and these are medium to large size institutions, they're actually letting the rubber hit the road and they're going forward with proof of concept projects, all sorts of things. Our business volumes are up about 160% on last year, and that's real projects going live. So hopefully that answers the question. I'm mindful of the time, so I've curtailed my answer. So you can ask more questions to people.
Thank you, Avir. There's one more question for Simon, actually. It's aside from data protection issues, do different jurisdictions approach transaction monitoring in different ways?
Yeah, absolutely. They do. So there are kind of, I would say, some basic rules in certain jurisdictions where things such as thresholds are definitely to be incorporated, or where indeed certain payments to certain regions are completely impossible, yeah, and are not allowed. So there are very solid rules around certain things which need to be incorporated into systems to make sure that those policies are not breached. But at the same time, there are also a number of other things to deal with. So there can be anything from the expected speed of transactions, with various jurisdictions expecting instant payments and things to be done and essentially settled within a microsecond. Whereas there are also sort of legal changes. Some jurisdictions are perfectly happy for you to put a transaction on hold and investigate it for a relatively lengthy period of time, whereas others, Germany being a prime example, actually it struggles with that because of the legal and contractual obligations again, that you have with your customer within the institution. So there are quite a lot of almost process-based as opposed to policy-based details, which when you're rolling out these things actually need to be assessed. And it's all too easy if you don't take the time to go from a sort of A to Z work through and really understand both the client and corporate journey. And I'm speaking right now about the end customer as opposed to our clients. If you don't understand that and roll that out effectively, it's very, very easy to sort of oversee something which turns out, 12 months later to be catastrophic for the institution.
Great. Thank you, Simon. We are at time. I want to thank all of you. I found it personally as a very informative panel and conversation. I learned a lot. I think I could continue discussing this topic for many hours, but thanks a lot for taking the time. And I think we're going to see, Vandana, we're going to see some of the solutions now also demoed, I believe. So thanks a lot, David, Avir, Simon, and Nandini for joining the panel.
Thank you, everybody. And
Thanks,
everyone have a
Christian.
great day.
Thank you, everyone. It was a great discussion, and so very well said on the amplified financial crime risks that are associated with payment landscape. It is definitely a priority for us at the DFSA when we look at supervising our firm. Next, we have invited two RegTech providers to demonstrate their solutions today, Synapsys Solutions and Difc Compliance. They both offer a unique insight into different technologies that can be deployed by different market participants. Each will have a total of 15 minutes to demonstrate their solution. You are welcome to submit questions to them. They will leave a few minutes at the end to answer as many questions as they can. Questions they don't get to answer during the 15 minutes, they will be able to respond to them later. Before we start with demonstrators, as the FSA, we would like to make the following disclaimer. Please be aware that the participation of a demonstrator in this event does not in any way constitute a recommendation or endorsement by the DFSA of that demonstrator, its products or services. The FSA is not responsible on any basis whatsoever for information presented by demonstrators and has not reviewed or verified that information. Getting dots sorted, now I would like to invite Ava, who you saw earlier on the panel, to take us through the offering of Synapsys Solutions. Ava is the co-founder and CEO, and he's responsible for strategic expansion of business across EMEA region. He's a senior financial services professional with over 25 years of international experience and has worked with the likes of JP Morgan in London, BNY Mellon, and Manulife Asset Management in Asia. Ava, over to you.
Thanks, Vandana. So, can you see my screen?
I can.
Lovely. So what I wanted to do before I play a short video of our capabilities is give some context as to who and what Synopsys do. So Synopsys is a B2B regulatory technology company that specializes in KYC, KYB, and AML. And we have created some innovative software that has 3 verticals on a platform. And you can take one or you can take all of the capabilities. The first capability is Aries, and that concerns digital onboarding. Now, you saw earlier in the conference the UAE pass. It's that same sort of idea of capturing information, verifying information using AI, biometrics, liveliness tests, etc. Now, what we're doing actually in Singapore is integrating the equivalent of UAE Pass into that capability to reduce the manual, repetitive nature of onboarding for companies. Okay, but that really, Aries is all about data capture and verification. Because you'll appreciate, there was a PwC survey recently actually that highlighted that 90% of a compliance analyst's time was spent on data capture and data structuring rather than analysis. What we seek to do at Synopsys is flip those percentages around, okay, so that 90% of the time can be spent on the important value-added research and analysis. And that happens within Artemis, our eKYC case management system. It basically takes that input data, enriches it with information from global databases such as Dow Jones, Factiva, Thomson Reuters, WorldCheck, etc. And using natural language processing, we do internet searches against any one of 140 different terms related to financial crime. So with that base information, what we do is we can conduct an automated risk assessment against the Financial Action Task Force 40 recommendations. So we're looking at country risk, tax risk, screening risk, structural and operational risk. And beneath those 5 factors, we have 13 different indices. And again, all of this is configurable so that the system can meet your particular risk appetites. And that bucketing of clients is important because you have the potential for low risk that have received 13 different checks to actually allow them to go straight through processing, okay? But with medium and high risk clients, they default from that straight through process and you have to apply human intelligence, but that's what the research and analysis is all about. And because Artemis is a centralized repository for all that information, you have immediate access. It's not about running around and getting paper files out and putting post-it notes, etc. And because it's all digital, there's a record of anybody, date and timestamp, who touches that particular case and annotates, and a record is kept of all that information. And then finally, our Athena vertical is concerned with transaction monitoring. This is much more toward the payment space, where it's sort of high volume, low value transactions. And again, we have algorithms that pick out certain suspicious cases and a report management system that uses all that information to improve the management, oversight, and reporting capabilities. So, in a nutshell, what Synopsys is all about is automating the manual and digitizing the analog as much as is humanly possible, okay? And also providing that information in a readily digestible form to those that need to conduct the analysis. Now, just because something like onboarding is mundane and repetitive does not mean that it's not extremely important. It can have, and it's already been mentioned earlier, that it can have reputational impacts, financial impact with fines, etc. But increasingly, what I'm seeing is that the manual process can lead often to a poor user experience. And as you heard earlier in the conference, the user experience is becoming much more important, okay? So that's really what Synopsys is all about and what we do, okay? So if I may, I'd like to play a short video that shows you Artemis, our main capability.
Spending too much time and resources on costly processes associated with Know Your Customer compliance and record keeping? Unsure if your KYC process is compliant with the latest regulatory requirements and guidelines? Are you drowning in tons of paperwork and facing difficulty in documenting and maintaining your clients' KYC profiles? Bid goodbye to all these challenges and simplify your client screening process with Artemis, your automated eKYC platform. Artemis brings to you its 6 main features, helping you to breeze through your compliance process. Artemis helps you to conduct individual and corporate risk assessment and risk screening against our integrated global databases to identify if your client is a politically exposed person, has been placed under sanctioned or adverse news, or will be potentially categorized as high risk. Based on the risk assessment and screening results, Artemis provides risk scoring and recommended risk levels for your clients accordingly. Artemis is also an automated system that keeps track and conducts ongoing due diligence on your clients, ensuring that your clients are being screened on a recommended basis according to their risk levels. Using our cloud-based solution, Artemis enables users to upload and digitize their clients' documents and information. This paperless process also enables our users to access and retrieve their clients' profiles and documents instantaneously. Artemis is also equipped with timestamping and audit trail functions. To track any amendments made to client's profile, the system records in detail the modifications being made to the client's screened information and conclusion, along with the time of the modifications made. Artemis also provides additional features, such as digital facial verification to accelerate your compliance process with speed and accuracy. Artemis uses artificial intelligence with advanced biometric technology and human intelligence to conduct identity and facial verification through a comparison of client selfie and identification photo. Artemis's optical character recognition function, also known as OCR, utilizes image processing to do a comparison between your client's passport details and the given information in the client's profile to ensure information accuracy. With our 6 main features in place, Artemis will bring you through a one-stop seamless KYC process that helps you to accelerate your client onboarding, fulfill your compliance mandates, keeping your clients' profiles organized, and improve your client's experience. Visit our website to find out more about Artemis and how it helps you to simplify your KYC process.
So, in summary, what Synopsys does is it allows our clients to keep pace with regulatory change without incurring undue compliance costs. And I'd be happy to answer any questions that anybody might have at that point.
Thank you, Ava. That was very informative video. Next up is Simon Dix from Dx Compliance. Simon is the co-founder and CEO of Dx Compliance. He's a lawyer and ex-head of AML compliance. Having worked with challenger banks, government bodies, and fintechs, Simon co-founded Dx Compliance to help tackle the problems he saw firsthand in many different institutions. Simon, over to you.
Hi everybody, and thanks again. So just to recap, my name is Simon, founder of Difc Compliance. We are today going to talk a little bit through what we do, some of the capabilities we have, and move on to discussing how we, make it relevant to today's discussion. How do we really help to mitigate that risk in the payment space? If you just move on to the next slide, please, and then we'll talk about that. What we really do is help protect banks and fintechs against essentially multi-billion-dollar fines by really changing the way that their anti-money laundering teams monitor transactions. So we've already spent a lot of time with clients, and this probably came through in some of what was said in the panel, in actually assessing not just the A to Z of that transactions monitoring process, but the A to Z of a relationship with a client. How does it start? How does it go right through to the end stages, and potentially then on to in sort of ongoing due diligence, or potentially into reporting if suspicious activity is occurring. And if we can just take the next slide, please. Then what a lot of that means is that we have essentially spent a huge amount of time looking at the risk-based nature, the risk-based function of the organizations and of the framework in which we live, and understanding how that can really be used to help mitigate the risks within the payment process. The risk, just to reiterate for anybody in the audience that's not so much aware of this, the risk is really that the bank is being misused for the purposes of laundering money, to take those proceeds, try and launder it through. And so by making these changes in the transactions monitoring process, we're really able to focus the energy on that part of the process where the money laundering is actually taking place. And that's not the money laundering that's potentially being conducted by, let's say, people on a PEP or sanctions list that are already known as higher risk parties. But actually, that's the transactions monitoring process rolled out across the rest of the customer base, which are those people who really very much need to be assessed to see whether or not those people who are potentially appearing as, let's say, standard innocent individuals are actually misusing the organization. One of the things that we really notice as well is that despite the MLROs and chief compliance officers really, let's say, spending huge amounts of time generating the large risk assessments and prescribing very, very precise mitigating measures, most monitoring systems were not able to bridge the gap between that assessment and the actual control measures that are being implemented. So what DX Compliance does is not only adapt itself to the unique risk appetite and the portfolio of your business, but actually also uncovers previously unseen risks through our proprietary machine learning and the ability to display networks and give you real-time feedback on the risks within the organization, meaning that both the analysts and at senior management level, everybody has a very clear ability to understand where any given risk is at any time and how that can be mitigated, or indeed how rules in the background can be improved to ensure that there is an ongoing level of improvement. And that's not from a kind of high-level FATF and Wolfberg review sort of standpoint, but that's actually at a very granular level: which product, which demographic, which age group, and so on and so forth. And just take the next slide, please. So we're now looking at really understanding how that works, and what are the major elements that had to be addressed. And one of the first sort of grounding blocks of what we do at DX is making sure that the system is configurable, and that's very much, it has to be configurable to your needs as an individual institution. And there's no point in you using the needs of another organization. And what we found is that a lot of the pain points with customers that we spoke with early on were actually that in order to change settings, to change rules, and to be able to change what it was they were seeing, there was a lengthy process involved with the vendor going to and from trying to implement those changes, which, when you own the risk and you are really the holders and representatives of that risk, is absolutely inappropriate. So we've really centered ourselves around putting that power back into the hands of your team, and that fits within your government and approval framework. We then integrated, we then opened ourselves up to integration. So of course, we integrate ourselves into both the payments processing systems and customer database of your organization, be that on premises or be that in a private cloud, or indeed for some organizations internationally also in public clouds, we are also able to integrate from third parties again. So whether that be integration into your CRM system to help document information on the source of the wealth and source of funds from a particular client, or whether that be integration into part of your onboarding process to make sure that the questions that clients are answering during that onboarding process are actually being displayed in their transactional behavior. In other words, they're doing what they're telling you they're going to do. That was really key in a lot of it. We spent a lot of energy as well and time really walking through with our clients what needs to be done to automate things effectively. So we kind of have a very much a three-based approach. We have the transactions monitoring as a rule-based system as the underlying level. And then on top of that, we integrate the machine learning through the DX detective, which really is designed to bring you those unseen insights and show you those links. You know, is a high-risk party actually trading with somebody else within an organization? Perhaps to 6 other people live at the same address or share the same email address or share the same phone number. And then push that out into what we have called our proprietary MLRO view. And that's very much that breakdown into where that risk is coming from. And you know, breaking that down to a level that we understand how it really sits together. Now, all of that has a big effect. If we just move on to the next slide, please. One of the major things is that it's increasing the accuracy. Yeah. So one of the major pain points, as I'm sure many of you are aware, is the lack of accuracy in having just a rule-based system or in setting things up in a way which doesn't necessarily fully respond. You end up with, on average, about 65% of false positives. And that's one area that we had to concentrate on very, very early on with clients to make sure that we can reduce those false positives from what they were previously seeing. And we actually measure that on an ongoing basis. The other thing is that actually most organizations were not making the most of the data they had. So we really open ourselves up and allow you to incorporate wider sets of data from within your organization. Be that based on extra data points such as geo-tracking and an IP address, or be it through extra third-party data sets that you've brought in from an external provider. We're able to integrate those into the wider transactions monitoring and risk assessment process so that you can get a very clear overview. And all of that is then displayed in a very easy to understand way for the regulator, because while regulators are indeed very supportive of solutions such as our own, and they have a very keen interest in seeing that stability within the financial system, it's not always easy from an auditor's perspective as a regulator to actually understand how that process has worked and to be able to break it down. And it's very clear that we help our clients bridge that gap. If we just skip on to the next slide, I'll just briefly touch on to some of the things that customers really are enjoying, I would say, and comment on frequently within the system. One of those things is very much the fact that we are putting that power, as you say, back into their hands. We're giving people the ownership they already have of the risk, putting that back into their own hands, and able to very much quickly say, this is what's happening, and show them very, very, very clearly where that risk sits, but also ensuring that not only those rules, but also the machine learning that's integrated is tailored to their specific needs and that specific segment of the industry, meaning that a cryptocurrency firm or a overseas payments provider doesn't get the same kind of level of machine learning as a retail bank or perhaps a merchant bank, who need different sets and different trained data sets in order to be as efficient as possible. If we just move on to the next one, just to give you an insight into how some of those results are showing. So we actually have a 75% reduction in false positives in the tests that we've done and in the ongoing measurements that we have with customers. That overall in the process shows an 85% increase into efficiency. One of the things as well, which we've done particularly interesting in the UAE with the GoAML platform, is to introduce the ability to actually submit SARs from our platform into the GoAML format that's required for submission into the authorities and then submission for the FAU at the Central Bank of the UAE. That changes something from being essentially a 1-hour task of typing and transcribing and lots and lots of manual work to being something which actually can be done in about 2 minutes. And that's been absolutely groundbreaking for many of our clients who are suffering with, we're really suffering with a backlog and a long sort of list of transcription and SARs to issue. We've also eliminated that long process that we mentioned before in terms of going back to the vendor and needing things to be changed. We actually help you with that, and you're able to do that in many cases in-house. Just to give a brief update of how things have been going on the next slide, we've founded initially in 2018 in Ireland and launched in 2019 version 1 of our product, which goes through a continual improvement process. We've worked with a number of challenger banks, but also international payments providers, and then more traditional institutions who focus on both retail and corporate portfolios. We have bases both in Dublin and London, across Europe, and have recently also expanded to the UAE, which has been really interesting for us. And our participation as well in the DIFC FinTech Hive has been really, really strong. And we're now really focused on our expansion across Europe and our ability to cooperate with different organizations, both public and private, in order to ensure that we can deliver the best level of our machine learning technology as possible and develop those frontier technologies as far as possible. If we move on to the next one. So we've just really secured as well during what's been a relatively short stint so far in the UAE. We've managed very, very well to establish ourselves in the region, have been doing some very interesting work with some of the large international and regional banks that are based out of the UAE, both in Dubai and Abu Dhabi, and as such have seen really strong traction and growth there. We're actually also bringing over the leadership team and growing our team in the new year out of the UAE, so you'll be seeing a lot more of us and hearing a lot more from us in the new year. And other than that, I'll end and allow you to ask any questions if any have come in. Thanks very much for the time.
Thank you, Simon. If there are any questions, you might receive them in the chat box later on. Actually, one question just came in. If you can just give me the chance. Apologies for this. Okay, here it goes. How economical are these applications for smaller firms? Many of the comments we get from them is that the cost of these platforms is too expensive.
So I can answer obviously for myself, but one of the more important decisions we made quite early on was to have different solutions appropriate to different sizes of businesses and different stages of businesses. That means that for smaller businesses, there's often the option to work either on let's say a smaller flat rate fee, which incorporates kind of room for growth, or indeed on a transaction-based level, so that you essentially only have to pay for what you use, which wouldn't, of course, be appropriate for larger institutions because they wouldn't make the necessary savings. But for smaller organizations, absolutely, that becomes quite important. I think one thing as well, just to remember when it comes to the economics of it all, absolutely don't forget to assess how much that ongoing cost can cause when something does go wrong, if the right processes and systems aren't in place.
Thanks a lot, Simon. Eva, if you can come back as well, I had a few questions for you as well. Eva, we can't see you anymore.
Can you see me now?
Yes.
Good.
Okay. One of the questions I have is, does Artemis have a digital corporate document verification feature? That is, can Artemis check the authenticity of corporate documents?
Right. The data capture and verification aspect is controlled within Aries. The difficulty one has is that, and this is a common thing when it comes to authentication and verification, with something like a passport, it's easy because there's an MRZ code that you can check on it, okay? And unless you have direct access to something like UAE Pass, you are reliant upon that copy of that particular document. The issue lies in being able to get to the source of truth. And say, for instance, somebody puts in a set of accounts, corporate accounts, and they have it independently wet signed, etc. That's all very well, but the issue lies in being able to truly authenticate that set of documents. So the ability to have something digitally signed within Aries, etc., gives it some legal credence, but the actual verification of a corporate document without going back to the initial register, and there's like 37 different registers here in the UAE, is extremely challenging, shall we say. Somewhere like Companies House in the UK that has all that documentation, yes, we've fully integrated that capability. So it's really being able to get at the verified source of information, and then via APIs, etc., we can consolidate. But that's where we are with that right now.
Okay, thank you. Now another question is, probably I can ask this to Simon, but it's applicable for both of you. Could you please elaborate on the types of efficiency gains associated with these products? Is it more than time saving?
Yeah, so there is two elements to it really. One is very much the time saving element. So if you imagine that, you know, the industry standard that we'd spoken about before with transactions monitoring, 65% of false positives, that's 65% essentially of the time that your team is working on something, which is essentially being done for something which could be spent on, you know, doing something much more efficient and be better used. But also one of the other things that we really notice is that there are a significant amount of charges and very high fees coming from a lot of the more traditional incumbents in the market. And because we have a more agile structure as an organization, we're often able to offer something which works much faster, provides much better insights, but also is done at a much more cost-effective level.
Thank you, Simon. Eva, do you have anything to add to that?
Yeah, I do, just a little bit. The genesis of Synopsys was to democratize the capabilities. The big banks have the ability and the budgets to spend on AI, machine learning. We heard from Mastercard earlier. Unfortunately, that comes with a large cost. And as Simon said, the incumbents in the market have focused very much on the tier one, but being able at an affordable price to leverage AI, machine learning, etc., means that you are able to provide those solutions in a very cost-effective manner. Now, just to wrap that up, we support 1,600 clients in 28 different jurisdictions. Yes, we've got some very large tier one banks that we help, but there's also a great many small, medium-sized enterprises that neither have the depth of compliance knowledge, technology knowledge, or the budget to spend lots on. And what we seek to do is address all of those three major issues and allow those companies to keep pace with regulatory change without incurring undue compliance costs. Hopefully that answers the question.
Hopefully, thank you. Simon, just a quick one. If somebody wants to see the demo, how can they get in touch with you?
Absolutely, I can share. In fact, I've just sent now through the chat to a link into the organizers chat. You feel free to post it within the. Feel free to post that within the wider audience, and if anyone wants to use that link, you can sign up, and we'll be able to organize a live one-to-one demo.
All right, great. Thank you so much for both Simon and Eva. It was really useful to see the demonstration.
Pleasure, thank you.
Thank you.
Absolutely, thanks very much.
Coming up next is the most awaited discussion topic for the day, the IFC Authority, the FSA, and future of finance. We will have presentations from 3 different speakers from the IFC Authority and the DFSA. Please feel free to send across your questions, and speakers will come back to answer those questions at the end of their presentations. Our first presenter for this session is Salman Jaffrey. Salman is the Chief Business Development Officer for the DIFC Authority and will be speaking on future of finance. Salman?
Okay. Well, first of all, can you hear me, Vandana?
I can hear you, but I cannot see you. You'll need to switch on your webcam.
Okay.
Okay, perfect.
Fantastic. So first of all, thank you, Vandana. Good to see you. Hope you're well. Thank you to the DFSA and to all of our partners for organizing our second, I guess, conversation in this space this year. Very excited to be here. My name is Salman Jaffrey, and it's an absolute delight to join you guys for this important conversation. I guess I'm going to be the first of at least three speakers in this session. And what I thought I would do over the next maybe 10 or 15 minutes is provide a little bit of context about how the DIFC as a whole thinks about innovation, how that's linked to what we've done in the past, what we're doing these days, and how that shapes our thinking about why we need to think about innovation, how we need to think about it, and what is the impact of it. So if you bear with me, I will run through a few slides to facilitate today's conversation. Hopefully, that will work okay. Okay. Sharing. Let me know once that is up and running, Vandana.
It is Salman. You're good to go.
So you can see, so you can see the cover page?
Yes.
Fantastic. So I guess the first question is, when you talk about the DIFC in Dubai, why is it that talking about the DIFC in Dubai, why is it relevant? Why is it important? And I guess it begins with markets and economic activity. The reality is that DIFC, which was established 16 years ago as a financial free zone with 3 separate entities, which I'll talk about in a second, was designed to do a couple of things. One is to diversify Dubai's economy and UAE's economy away from hydrocarbons. But doing that, the way to do that was to provide access to very large markets through a place that is very attractive for business and for investors. And so what you see on the screen is a very aggressive summarization of lots and lots of data about how big our markets are and how good our platform is. So the key message is, why MIASA? And I suppose that begs the question, what is MIASA? Well, MIASA for us means, everyone has their own acronym. Ours is Middle East, Africa, South Asia. And that's important because that provides the scale. It provides the scale that Dubai or GCC even standalone does not have. What's interesting about MIASA? MIASA has a large, young urban population with tremendous growth prospects. The economies of MIASA manifest the tremendous success of emerging markets, and all of what I'm saying obviously excludes the recent global impact of COVID, of course. MIASA has incredibly attractive financial services prospects. And of course, in many parts of MIASA, although not ubiquitous, there is tremendous growth in digital penetration, both in terms of actual penetration and potential for. And so the main takeaway of MIASA is there is a business case here for consumption for a large body of people over a large amount of time. That's the promise of MIASA. Now, what Dubai has done is transform its historical and geographical status as a pass-through economy, a place where culture is mixed. It's done really, really well. And it's invested, the government and leadership here have invested in Dubai as a place where trade happens, where the government is forward-looking and wants laws and regs and lifestyle to be progressive. Of course, it has to be business-friendly. You have to have the infrastructure, the roads, bridges, highways, aviation sector to be able to provide access points to markets. You've got to have the infrastructure, both not just roads and bridges and highways, but data, data protection, access to high-speed internet, as well as the rules and regs. We'll talk about that. And of course, it's all about ultimately getting the best people in the world in financial services and law and business and technology, and getting them here to conduct business. So that has been really, really successful for us. I'll quickly move on. I would not be doing my job if I didn't put in a formal plug for our center, which has enjoyed so much success over 16 years. Look, lots of data here. Let me give you the key summary. Because Dubai has provided great access to Miyasa, DIFC as a platform in Dubai has really accelerated that. And as a result, effectively, we built this amazing financial center with lots of people. This data is as of mid-year this year. 25,000 plus people work here. 2,500 entities are registered here, and a whole bunch of them are financial type firms. To be clear, this refers to firms that are regulated, but also many other firms as well. So these are financial type of firms. And essentially at the bottom of the screen, the key message here is that to do financial services and finance, you've got to get the ecosystem right, which means not just the big financial institutions, such as the big banks or the asset managers or insurance companies, but you need the law firms, you need the accountants, the consultants, the advisory firms. All of that has made us the amazing platform that we are for Miyasa. In the bottom right, I should add, and I'll talk about this later, in the last 3 years, particularly in the last 18 months, we have now become a powerhouse center for innovation. We have mid-year, we had more than 230 fintech and innovation companies. That number has increased significantly. So some tremendous success. And so the question is, as we've pivoted, as we're in the process of thinking about how to disrupt our traditional deep financial services market, what enables us to do that? Why is that the case? What are the opportunities? The next slide is busy. Let me try and break it down into two essential arguments, right? One argument is that place like Dubai and DIFC, right? A lot of the push for a services-driven, forward-looking future economy that is digital is government-led. Okay, so government has done has taken a fantastic leadership role in enabling or ensuring that this economy focuses on digital and the future. But if I take that aside, I think the three areas, every region has their own particular opportunities. What I'm suggesting here is that these are three that are top of mind simply because of the scale available. And those three are essentially KYC, so KYC AML compliance. So compliance or the digitization of compliance activity, that's a great opportunity. Number two is payments and remittance. And of course, number three, which is linked, is financial inclusion. Now, again, why do we think that these three areas are interesting? As we'll discuss later with my colleagues, we have a lot of financial institutions. We have a lot of foreign institutions, foreign individuals. This is a region that is in crossroads between multiple developing countries, emerging markets. So it is important for banks and regulators and ministries to ensure that compliance and risk is managed well. These things can be very expensive when manual. There's a digital opportunity to address that. And we've already seen from earlier this June and from yesterday and today as well, lots of opportunities there. Payments. Now, I talked briefly about Miyasa. What I failed to mention is the demographics around here, coupled with the unique nature of the labor markets in the GCC, and specifically the UAE, mean effectively that we have the top 4 or 5 or possibly 6 remittance corridors in the world, i.e. labor populations sending dollars back to their indigenous or to their home countries. And these corridors are between, let's say, the UAE and India, Pakistan, Sri Lanka, Philippines, and other places, right? So tremendous opportunities there. The fintechs would argue that banks and traditional Money exchanges are very inefficient in doing so, and therefore we see tremendous opportunities. Financial inclusion is a catch-all phrase that refers to the underpenetration of financial services, whether it's insurance or payments or lending or other things like that. And essentially, it means that digital technology, with its diminished cost to serve, now allows financial institutions, by the way, and governments to provide financial services to large swaths of people. All of these translate into opportunities, which was the point of why I'm sharing this data with you. Now, what have we done? I'll zip through this slide. Our first foray the last 2 or 3 years, led by kind of the forward-looking thinking of both the authority and our partners and friends, the DFSA, means that our primary focus was in fintech. Okay, so in the innovation space, I talked about 3 areas. Fintech was a natural place for us to start, given that we're a financial center, on the back of leading regulations, the region's first regulations on crowdfunding, the establishment of the region's first fintech accelerator called Fintech Hive, partnerships with Startup Bootcamp, the commitment of $100 million of funds for fintech, all means that we have done a really, really good job of attracting fintechs here. On the page, the key messages, and by the way, this number has changed significantly. It's north of 260 now. But at what point in time, when we had roughly 220 odd fintech companies, we had a distribution between SaaS, payments, wealth management, eKYC, of course, analytics, and other. And other is a catch-all for a rich variety of different types of fintech firms. The bottom part of the screen talks about the emerging distribution of where the regulated firms are finding themselves. And this will continue to change. The key message here is look for significant growth in the bottom part in the payments and money services business, which will continue to acquire lots of amazing regulated firms from the globe and the region. So now, we started with fintech. What's our thinking and why do we think that way? So our view is that fintech is a necessary condition for us to start, but there is significant opportunity for the DIFC to play a role in the broader digitization of regional economies. And this means not just looking at fintech, but looking broadly at the future of finance. Now, one reason is that with utmost respect to our traditional financial services players, they remain critically important, but as their growth profiles going forward are going to be different as opposed to firms that are going to be serving in the AI cyberspace, firms that are going to be helping ecosystems to grow, firms that are going to be driving RegTech and fintech. So that's just a natural difference in the trajectory of growth. But the other thing that we have taken the view, that we need to take a larger view of digitization because our role is to drive economic growth and job creation. So that's our thinking. So first it was traditional financial services, which continues. Next was a pivot to fintech, which continues. Now we're embarking on this really exciting journey of future of finance. I won't try and go through all of these, but my key message here is that there's lots to do. And we're working very closely with our ecosystem partners, tech firms, and of course, our regulator, which is very progressive and forward-looking, on figuring out which of these areas to go into, how do we grow, how do we attract companies, how do we create the right conditions so that we can take advantage of these themes. I talked about payments. That is proving to be tremendously interesting and important for our ecosystem. Banking today is already digital in as much as the processes and the front end and back or mid offices of banks are already digital. We are moving towards a truly digital banking platform. In the DIFC, of course, wholesale banks, we already have digital banking. It's permitted, not an issue. My colleagues of the DFSA may discuss the importance of digital assets. We'll be looking at how to create the conditions in this market so that we can start to digitize and tokenize assets in the appropriate way. RegTech, I've talked about already. A key piece here is to ensure that not only do you have the underlying talent and the startup firms, but you have the appropriate investment and expertise that can help scale these. So we're very pleased to have completed a brand new VC regs, which I believe were, after public consultation, have been live since November 1st. Very, very exciting new updates there for you. And below, trade finance, sustainable finance, cyber, AI, all critical themes that we will be looking at either in the context of enabling our future of finance or in sectors in their own right. I've gone through a large amount of information rather quickly. It may be worth taking a step back and saying, what does all this mean? And where is this leading us down? What path is this leading us down? So let me recap again. We were established 16 years ago to drive economic growth, job creation, and to diversify this economy away from hydrocarbons. That first phase, I would dare say, has proven to be successful, both in terms of the economic contribution that we have to Dubai's GDP, which ranges from 4 to 5% on a net incremental basis. It has also added, 2,500 plus companies here and firms here, and the assets that are managed here and written out of here. All that is a testimony to the success of this business model, which, by the way, people around the world look to emulate. The last three and a half years, together with our regulators, the DFSA, we have taken a very close look at how to transform that scale, that base of financial services into fintech. That experiment, if I might use the expression, has been also very successful. We have aggregated and scaled capital and talent, just like we did in traditional financial services. We now have north of 260 fintech firms. But then our latest thinking is to then parlay that success into the future of finance, as I've talked about. I've given you a rationale. And really what it is to drive the broader digital agenda. In our view, we'll be looking at essentially 5 areas. We will be looking as a financial center to continue to support companies to enable rapid growth. Ultimately, people come here to drive economic growth, shareholder value. If you're a public company, returns to your owners if you're a private company. The second thing is we will continue to invest in products that attract and incentivize growth companies so that we get that engine for the future of finance going. So we have lots of different options here. We will continue to do that. We will continue to look at business enablement. So the idea is, maybe 10, 15 years ago, the innovation or the model was to provide this physical, legal, and regulatory island that we are, and be able to provide space and a license. And today, it's not just that; it's about enabling business growth, reducing the friction, managing, helping clients grow their business. So we'll be looking at that. Ecosystems are immensely powerful. We've shown that in conventional financial services. We hope to replicate that depth in the digital space again. And so we're building a future finance community. Latest example was, I think we had a press release yesterday on our innovation hub, where we're putting together top innovation companies across multiple sectors, and look for that in the Gate Avenue. And last but not least, as I transition this conversation over to my colleagues at the DFSA, none of this happens if you don't have the rules and regs in place to enable this. So our regulator has shown tremendous vision in continuing to innovate and introduce new regulations that are solid, well thought, sound, and drive growth in the form of payments, money services, VC, possibly in the digital asset space, but also on our side, on the authority side, to continue to adjust our laws and regulations, whether it comes to IP protection or data. And so let me close by saying it is a very exciting time for us at the DIFC. We look forward to continued engagement with the community. I hope today has been an interesting discussion, and I hope that we continue this conversation, not just this year, but on an ongoing basis. And I think I'm going to pass that back to Vandana now.
Thank you, Salman. There are questions coming in, so I would request you to stay put until Peter's and Justin's presentation so we can answer all the questions together. Next, I would like to introduce Peter Smith, who's the Managing Director of Strategy and Policy and Risk at the DFSA, who will be talking about innovation at DFSA. Peter, over to you.
Thanks, Vandana, and thanks, Salman, for that interesting run through 16 years of what the IFC has achieved and the things that we're going to achieve going forwards. The DFSA, as Salman mentioned, is working very closely with the DIFC authority on the future of finance strategy for the centre. Over the last 2 days, we've had lots of discussions about all things innovation. Events like these are important for all of us to further our understanding about what technologies are available, benefits and risks associated with those technologies, and their potential impact on financial services. It's clear from the discussions that have taken place that financial services sector is innovating rapidly. Firms are trying to use more and more technology to increase their competitive edge, whether that's to defend an existing market position or to create a position in the market. There are few, if any, parts of the financial services value chain that cannot be done better, more efficiently, or with a better user experience than has been the case in the past. So there's always room to innovate and to improve. We've seen many institutions that are undergoing digital transformations and some that are not. It's clear that in many areas of the market, financial institutions who don't innovate will struggle to either to protect their existing franchise or to develop it further. So the title of my talk today is about innovation being the new normal. And not only is it the new normal for financial services firms and people providing technology to financial services firms, it's also the new normal for regulators like ourselves. So what does this mean? Regulators who want to be successful in the digital era need to innovate. Innovation needs to be part of our business as usual. And indeed, we at the DFSA have 4 strategic themes that we focus on, and innovation has been one of those themes for some time now. Let me start with data. We're in a period of unprecedented data creation, data collection, data storage, and data analysis. The World Economic Forum has estimated that the world produces 2.5 quintillion bytes of data a day. 2.5 quintillion is obviously a large number. I'm not going to tell you how many zeros there are in that, but it's quite a lot. And 90% of all data that has ever existed has been created during the last 2 years, which you need to think about for a second. Think about the implications of that. According to the European Commission, the value of personalized data by the end of this year will be 1 trillion euros, or 1.17 or so trillion US dollars, which by anybody's maths is a big number. So data and its value are growing every year. Financial institutions hold a considerable amount of data and are finding increasingly innovative ways to unlock those data and to use them. Many indeed have referred to data as a new currency or a new type of gold. For us as a regulator, there is clearly value in the data that we have and that we can access for us to carry out our role as a regulator. And we collect, hold, and use a considerable amount of data. We think we can do better, as most organizations can, in how we hold and use data. And so the slide in front of you talks about our digital data strategy. Now, to some of you, I'm sure some of this will be very much motherhood and apple pie. It's although we're talking about digitalization and the use of data, some of the principles that we're applying to this and applying to improving our business processes and making ourselves easier to do business with are very straightforward. The simple idea that data should be input once and not multiple times across an organization is an important one. And that's also important when firms are thinking about coming to the DIFC. How many touch points do they need to have in order for that to happen? Do we truly understand what our data needs are? Do we need all the data we currently get? Is there data we need that we don't get? Are there additional insights we can derive from structured data we receive or from unstructured data? All of these questions and more need to be answered. We look to digitize our processes in line with the government who devise a digital strategy and with the Smart Dubai program, which we heard something about earlier in these sessions. And we aim to get rid of processes and improve processes that we don't need. For us as a regulator, what we're not trying to do necessarily is we're not trying to get rid of people. The supervision of financial markets, financial firms, and the transactions that go on between them does require the exercise of judgment. For now, at least, with the current development of artificial intelligence, people are still going to be needed for the foreseeable future. And so we're not looking to remove the need for people to exercise judgment in terms of what they see in their regulatory and supervisory activities. It's not a small project for us. One we'll need to evaluate continuously to make sure that we're taking the right steps forward. As with any other organisation in the DIFC, or indeed wherever companies are located, we have to take account of the legal framework we operate in terms of data protection, in terms of other relevant legislation. We have to be very conscious, as we all do, about cyber risk, about which quite a lot has been said over the last 2 days. And so I think the issues around data protection and where data has to be held and the use of the cloud and so on are quite interesting for an organisation like the DFSA that has essentially one location. The location of data is less of an issue for some of the global firms that we supervise, who have hundreds of locations across the globe. Requirements for localization and data and so on are quite challenging. Another area globally that is changing rapidly, which Salman's already mentioned, is the area of payments. So what do consumers want in this area? Well, I read a recent report that said they want emojis, but I'm not personally convinced that emojis are top of people's list when it comes to payments. What people want is speed and convenience. They want immediacy. They want real-time access. They don't want complication. They want a seamless payment experience, and we're seeing the long-standing system of particularly cross-border payments, but not only cross-border payments, retail payments, credit card payments, the growth in online shopping and so on. All of these are leading to new forms of payment and entering the market. As part of this, most of these new payment methodologies are also accelerating the shift away from cash into non-cash payments, which obviously also has the consequence of generating significantly more volumes of data, as I've already mentioned. Digital payments are not without risk. Many regulators are making changes to their regime to enable different types of payments to exist in the marketplace. We have done that ourselves and launched a comprehensive money services regime earlier this year, which is described on the right-hand side of the slide in front of you. Our regime allows for a wide range of digital payment activities, including the obvious things like remittances and transfers of money. It allows for stored value and digital wallets. It allows for payment initiation via a whole range of methods, as well as things like account information services, where information can be provided across a range of accounts to an end user through a single interface. So payments is, as Salman said, an area of considerable development. We've had a lot of interest from firms wanting to operate in this space, and we've seen a lot of different technology in relation to these applications, some of which you'll have heard about over the past 2 days. In terms of technologies, obviously things like near-field communication technology are not new. Those in the audience from Hong Kong will have been familiar with the Octopus card for many years, which uses the same technology. And those of us like myself who've lived and worked in London will be familiar with the Oyster card. And indeed, those of us here in Dubai will be familiar with the NOL card. And so all of which use the same underlying technology. But the use of this has gained considerable popularity in recent years due to the demand for quick and easy payment processes. And of course, during the pandemic this year, the use of contactless payment has become also the new normal. Indeed, there are plenty of places where contactless payment is the only option available if you want to buy or pay for something. And we don't really expect this particular trend to be reversed. And then biometrics, including payment verification via fingerprint scanners, facial recognition. We're also seeing developments in heartbeat analysis and vein mapping and other perhaps more esoteric technologies. With the rise in recent years of identity theft and identity fraud, biometric authentication is obviously one key way that the industry can provide safe and accurate and efficient solutions. I mentioned only a couple of examples in terms of biometrics and near-field communications, but there is a lot going on in terms of different technologies. Obviously, the desire from customers to have quick and easy and convenient payment methodologies doesn't always fit with security, and this is something as a regulator that we are concerned about. But just taking a step backwards and thinking about technology, I've mentioned cloud already. So essentially, I think we see the cloud, biometrics, and the use of APIs as foundational technologies, and on which a number of other things will be built, including the use of big data and big data analytics, including the use of artificial intelligence and machine learning, and including applications using distributed ledger technology. But it will be important for us as a regulator and for the community that we work in to make sure that those foundational elements of the cloud of APIs and for biometrics to be properly in place and working well to provide the necessary degree of security. Turning to machine learning and its application, and particularly in the case of fraud, we've heard from some industry practitioners about the types of technologies that can be used. AI and machine learning, obviously, we're seeing more and more of in the financial sector, helping firms to manage and draw value from the ever-growing data sets that I mentioned earlier, and also to identify patterns that previously they simply would not have been able to identify, which is critical in terms of flagging both potentially suspicious behavior, but also sometimes potentially positive behavior. If done properly, machine learning can distinguish between legitimate and fraudulent behaviors, and it will adapt over time as different methods are tried for fraud and other poor behaviors. I think many of us will have received a text message from our bank asking if a transaction, often with your credit card, was made by you. That message obviously isn't sent by an employee of the bank, but by the software that they use to scan transactions for patterns and for unexpected anomalies. And that is a good step forward, clearly. That immediacy of notification and so on has the potential to significantly reduce fraud. It is important, however, that there's a balance between the use of technology and human intervention, so that overall people's defenses deliver smart real-time analysis and identifies issues that can actually be actioned. If we think of technology as the new front line of defense and human expertise as the second line of defense, I think that's quite a good way of thinking about it. Obviously, one of the debates in the AI community is whether algorithms that are self-teaching will go in the wrong direction and how that can be explainable, and the challenges that poses, particularly from an ethical point of view. But as with all systems, I would just repeat the old adage that garbage in tends to lead to garbage out with all systems, and this is something we obviously need to be conscious about with these new technologies and the way that they're developed. So I think that's enough about technology for now, and just to move on to talk a bit about how we try and keep on top of some of these issues. There is a lot to learn, and I don't think we as a regulator would claim to be experts in all areas, and we do look to our regulatory colleagues and indeed other colleagues internationally to support our learning in this area. Yesterday, Brian Steiwalt, our CEO, talked about our role in the Global Financial Innovation Network, which is a grouping of regulators who are interested in innovation and interested in developing the ways that the regulators approach innovation and related issues. We're part in GFIN of a number of their work streams, as well as sitting on their board, and we take part in their RegTech work stream, which obviously links into the subject of these 2 days. In that RegTech work stream, we're discussing regulatory technology developments with other regulators across the globe, finding out how they engage with their own RegTech communities, what events they've done, what's worked, what hasn't worked, when have tech sprints been useful, when have hackathons been useful, when is it better to have an information sharing webinar, what sort of things are useful in bringing the community together, and what sort of things are useful in actually solving real problems. So we hope that our participation in that particular piece of GFIN work will help us keep up to date with innovation and with technological change. So that brings me back to sort of my original initial comments today. If innovation is the new normal, how can we make sure as a regulator that innovation is our business as usual? We need to be technology informed. That doesn't mean we can or will promote or endorse any specific technology or certainly any specific vendor, but we need to be knowledgeable about market developments, whether or not the firm in question needs to be regulated, because we need to understand what technologies are being provided by third parties to the firms that we do regulate. And we also need to look at the way we operate and whether we have the right people with the right skills within our organization. And some of these, of course, some of these skills are things that regulators haven't necessarily needed before, partly because some of the tools now available haven't previously been there. I think just in closing, we can and we will support the DIFC innovation ecosystem. We'll regulate where appropriate, and we won't regulate if it's not necessary. Being a part of the thriving ecosystem that Salman described earlier is something that's challenging and exciting for us to be a part of. It helps us to address some of our own innovation challenges as an organization, but it also helps us to be a part of building something that is bigger and developing and innovative, as you would expect. So that's all I'm going to say today about innovation. I'm going to pass over, I think, back to Vandana, but then on to my colleague, Justine Baldacchino. So thank you, Vandana. Apologies if I've run on slightly too long.
Thank you, Peter. Our last presenter for the day is Justin Baldacchino, who will be talking about innovation and supervision. Justin, over to you.
Thanks, Vandana. Firstly, just like to thank everyone for attending. It's great to partner with the DIFC on this event. And I guess following on from Salman's presentation and Peter's presentation, I'll be delving a little bit deeper into what we do as a supervisor and how we take a risk-based approach. So I'll head over to the next slide, please. Thank you. So at a high level, we always hear about a regulator talking about the risk-based approach, and what I intend to do over the next 10-15 minutes is actually delve deeper into what we actually do from an authorization perspective, and then how do we supervise as well as part of that process. So the first component is around identifying the actual risk when we do have a firm that approaches us in regards to being authorized, and then we try to determine what the allocation of resources should be put to that risk that's identified. So I'll go to the next slide that sort of delves deeper into the detail of that. So at a high level, I guess the what's imperative for a regulator is to ensure that there is that appropriate control where we're able to determine that when a firm comes in to be authorized, that we understand the business itself of what they're wanting to conduct, and we understand the structure of the business as well before we authorize. Key components of that is, of course, looking at the risks, whether they're financial or non-financial, and then trying to understand what the inherent risk of the firm actually is. And then the mitigation of that risk, which is where I guess RegTech will play a big part. The inherent risk component is something that takes quite a bit of analysis, not only for the team internally, but also talking to regulators externally, looking at the industry, looking at the market, trying to understand exactly the detail of what it is that the firm is trying to achieve through its business model, its strategy, its corporate governance, looking at the financials as well, and trying to understand, are the financials realistic? When they give us a 3-year plan, do we think it's achievable? How will it be achievable? Do they have the appropriate operational controls or resilience around the firm itself? Do they have the right technology that can actually drive and achieve what they're willing or wanting to do? Most importantly, as we've seen with most institutions globally, there's been a struggle in regards to the conduct of how firms are presented to their clients and what they how they act and also how they interact with their clients on an ongoing basis. So we have a huge focus in regards to the risk of the conduct of what business is actually taking place within the DIFC. And then how do we also ensure that they have the right controls around AML and also financial crime? The mitigation of that comes always through the process of ensuring that we understand what controls are in place. So at a high level, when we're talking about a risk-based approach, we're talking about the inherent risk of the actual firm, the control risk that it actually has or the controls it has in front of it, and the residual risk. Now, what's important about the residual risk is that every firm globally will have a component of residual risk. And as regulators, we need to understand what that residual risk is and whether that residual risk can be minimized by further controls. And that's where we, I guess, make a first assessment as we authorize a firm, but bringing in the firm, I guess, within the DIFC and then regulating it from a DFSA perspective doesn't just stop when we bring the firm in on day one. It's an ongoing process. And some of these firms have been within the DIFC for 15+ years. So we've been able to step back and have a look at the potential impact of the firm coming into the center, look at the financial and non-financial impacts that they could have to the whole ecosystem. And then we look at the probability of what is it that the risks that potentially have been identified at the start, do those risks still exist into the future as part of doing ongoing risk assessments? And we do these ongoing risk assessments depending on the risk of the firm, and we allocate, I guess, our finite resources to those risks. And what I mean by that is that, we take a simple example around sanction screening. And if we see a firm that has a huge amount of transactions and therefore has the ability to affect that ecosystem, if there is a high probability that there might be an issue from an AML perspective, from a DFSA perspective, we will allocate the appropriate resources depending on the risks that we see that are coming in from the actual firm. But in saying that, we also have a look at how the firm has dealt with the control of that risk, which could be a RegTech, supplied control that ensures that the appropriate screening of potential transactions that may contain, whether it's fraud or AML related transactions, how that sort of transpires to what we identify as the key risks. And what we've seen is that many firms have now, I guess, and due to COVID as well, we've seen a huge uptake in relation to the outsource activity of having those mitigating controls. Where that's a benefit is the fact that there is, as we've heard throughout the last 2 days, the thing about costs and efficiencies, and we understand that that is a driver in regards to what is being done. But our key concern all the time from a mitigation perspective is to understand from the firm whether they themselves have the appropriate controls. That what if that outsourced firm or that RegTech firm tomorrow didn't exist? How would they cope with that? What is their backup? How are these issues escalated to senior management? How are they discussed at a risk committee? So what we try to do, I guess, from a governance perspective, is to understand from the firm itself, how are they mitigating their risk going forward, even though they have the ability to have better efficiencies or better controls, but also what is their risk management process, and how do they ensure that whatever is written down on a manual or a policy is actually done practically. So I guess from my perspective, what my team does on a daily perspective is look into what the firm itself is doing from that governance perspective. How are they mitigating the risk? What compliance is taking place? How is the escalation of that compliance making its way to senior management and the board? What audit trail is in place? How is the, I guess, from an audit perspective, whether it's internal or external, how is that being looked at, again, from a senior management and board perspective? And we find probably the audit trails to be one that is quite contentious at the moment, as we've seen a number of failings and the, I guess, the finger pointing to audit firms, given that the reliance is on the actual audit firms. So what we try to do is get a better understanding from the firm on how they've been able to mitigate those controls to ensure that when an audit report is finalised, what are they doing about it? If there's key concerns through the audit report, how are they being escalated? What has been put in place in order to mitigate that control that the audit report has sent up to senior management and the board. And of course, a key concern for us is making sure that the ecosystem going forward is manageable from a capital and liquidity perspective. We have seen that firms do take sometimes a much risky approach where they don't have the ability to have the appropriate capital levels going forward throughout the years, and they also aren't able to meet their liquidity requirements. So when I say risk-based approach, again, we have a certain amount of resources that we can allocate to risk, and that risk is either distributed on a relationship basis, where for a lot of the, I guess, higher risk firms or our bigger banks, we have a relationship managed process where if there is a concern or a risk or an assessment taking place, they have a direct contact with a supervisor within the DFSA. And then for the much smaller firms, where we do have firms that maybe have 1, 2, 3 people, maximum 10 people, they're seeing more from a pool perspective. So when we risk assess those particular firms, they'll be done in a different way. So like all firms that we deal with at the moment, everyone has a limited amount of resource, and that resource is, I guess, distributed or allocated depending on the risk of the business itself. So what we try to do is work closely with firms, understand those risks, try to, I guess, provide feedback where we feel the controls that are in place do not meet the needs in order to protect clients or protect the market. And where we feel that there is I guess, a concern, again, we can't recommend where to go to from a RegTech perspective, but we can sort of provide insight in where we feel the best or most appropriate controls should be put in place. Again, this is an ongoing discussion, and innovation is definitely making it easier for firms to meet those control breakdowns and to, I guess, strengthen the controls that they have in place. But what we've found also is that innovation can also sometimes create more risk for the firm. And that more risk can come through dependency of what they do, especially from a control perspective. So I guess what I was hoping to get through today is for I guess the audience to better understand the fact that every time we authorize a firm, we look at the impact, we look at the probability of the risk, and then we determine what sort of supervisory engagement we will have for the future of the firm within the centre. And that will change or alter depending on what the business is doing. And some firms that we've seen come into the centre have grown dramatically also over the years. So we've been able to sort of pivot what we do and how we do it in relation to the particular firm and the risk that it poses to the DIFC. Where we see now, I guess, a key focus, as Salman has articulated and Peter had delved into, the innovation space and of course the RegTech and technology space is for us a learning process going forward as well. So what we try to do is get a better understanding of what the firm is wanting to achieve. We are of the total understanding that each of these firms, their business models are different, and we have to work with the firms themselves to, again, understand the actual business model, understand the risks that they pose to their clients, and understand the risks that they pose to the market as well. And that's an ongoing challenge for us, and we'll continue to do that with the help of the DIFC, with all the firms that's in the DIFC, and we'll continue to grow, I guess, that ecosystem and making sure that it's safe from a risk perspective, which is something that my team constantly strives for, and that's something that we'll continue to do on an ongoing basis. When we talk about innovation, not only are we talking about the firms that we, I guess, regulate, but the next slide will go into a bit of detail of what we're trying to do to innovate, I guess, from a supervision perspective. And what I mean by that is for the firms that we regulate at the moment, we have 506 authorised firms. We have 105 designated non-financial business and professions. We have 17 registered auditors as well. And what we try to do is make sure that we also are innovating consistent with the firms that we regulate as well. And what I mean by that is to make the process as efficient as possible. As we heard from the UAE pass, efficiency is key to making sure that we continue on that momentum, but also making sure we've got the right controls in place, that we, from an underlying risk perspective, our risk tolerance remains, but the efficiency of our approach is ensured that it's consistent with not only the industry, but other regulators globally as well. So as we see from this slide here, what we've tried to do is get away from a paper-based form process that we had when we first started from a DFSA perspective. Now, all, I guess, from an authorization perspective, when we have a firm wanting to be authorized by the DFSA, we have an e-portal, which is a full online system to get away from a paper-based system. We try to automate where we can application forms. Again, this is a constant work in progress where we get a lot of information, as Peter said, on a daily basis, as well as our quarterly reporting, audit reports and everything else, and what do we do with that data. So from an application perspective, what we're trying to do is get the information feeding straight into our systems. That way we have a good idea of what it is that the firms themselves look like when they were authorized and what they look like into the future as well. One thing that we've been, I guess, looking into over the last few years and trying to get better at is around the robotic process of automation. As I said earlier, we have, whether it's monthly, quarterly reporting, surveys, we have interactions with our firms, we create notes, we have a huge amount of data in regards to firms that we regulate. But then what do we do with that data? There is only a certain amount of resource that we can allocate from a human capital perspective, but then how do we use robotics in order to process that information and think about it more strategically into the future as well? So we've been looking into, I guess, the automation of that process, and also around automating our data aggregation and analysis as well, which is an ongoing process for us. And we think that RegTech firms will make that process easier potentially for us into the future. and we do, I guess, partner with particular firms at the moment to try and make that job easier, but that's going to be an ongoing development, and that innovation space will allow us to be more efficient in what we do and how we analyze information as well. What we've also tried to do is have a regulatory intelligence assistant within our website. Again, this is work in progress. There's a lot of work in that, given the amount of data that we have within our website, but trying to navigate through that data is something that we're trying to make key to people that are potentially thinking about coming into the centre, and also trying to understand what our rule book looks like and how that rule book is applicable to themselves. So I'll probably pause there. I'm happy to take any questions, but I guess what I wanted to do is give you a high-level overview from a DFSA perspective of what we do from a risk-based approach, supervisory perspective, and what we try to do, I guess, from the innovative sphere and what we're trying to do going forward as well. So Vandana, happy to take any questions, otherwise I'll pause there.
Thank you, Justin. I'll just invite Peter and Salman as well back on the screen. There are a few questions, so we can all answer them together. Salman and Peter, if you can come back. Okay, great. So Salman, the first question is for you. Can you tell us about your plan for the Future of Finance Innovation Hub at the end of the Gate Avenue? Also, is DIFC moving towards more to be a fintech hub than a traditional financial center?
Okay, well, let's talk about the second one first. Over the last, I guess, since yesterday and today, you've heard a range of perspectives on how financial services is changing. So we all can prognosticate about how that's going to happen over time, but none of us exactly know the sequence of events and how that's going to transpire. But we do know that, you know, financial services and how it's conducted today and how it's supervised and how it's done is different today and will continue to be digitized. So the short answer is that will the ecosystem that we're developing in financial services continue to be different than what it was? Absolutely. Whether or not it's useful or possible to pinpoint whether it's 50% or X% is unclear. But clearly, the mix of who does what, okay, strategically, is absolutely different today than it was, let's say, 5 or 10 years ago. So from that perspective, the mix of our base of authorized firms, as well as broadly speaking financial firms, continues to incorporate a lot more technology-oriented fintech companies. Now, the first part of the question is about the Innovation Hub. You know, one of the things that we've learned as a center from talking to clients and from visiting tech centers around the world in San Francisco and New York and London is that, believe it or not, being close to other people actually matters. So the notion of community, and I say this respectfully, knowing fully well that post-COVID, obviously the way in which we work and live is changing. I concede that point. But it turns out that in the world of business, being close to clients, investors, and peers is something that our tech ecosystem finds very valuable. So what the Innovation Hub is a formalization of that in a physical space that brings people together from a physical perspective, but with the help of our partners, also in a flexible way. So our clients want physical proximity, they want access to high-speed data, they want flexibility of scaling up and scaling down as they become bigger or sometimes smaller. That Innovation Hub is designed to put that all together in a physical community. So was that the question essentially, or was it? I hope that answers the question.
I would say so.
Okay.
Thanks, Salman. The next question is for you, Peter. We have seen in the past 2 days how technology firms are providing solutions which can be used for enhancing the KYC AML systems and controls of financial institutions. Till now, we have not seen any guidance from the FSA on the eKYC or video KYC. Is the FSA looking at this aspect, and can we expect any guidance on this matter in the near future?
Yes, we are looking at this and have been looking at it for some time. Those who are active in the area of eKYC and AML checks will be well aware that the UAE has undergone an examination by the Financial Action Task Force this year. The report came out earlier this year on the country's overall approach to anti-money laundering, countering terrorist financing, sanctions, etc. And so what we will say publicly on these things will partly be influenced by the country's response as a whole to some of the things that are said in the FATF report. So we need to be clear about that. Having said that, we do recognise both the potential benefits of eKYC and other solutions, and also the considerable interest that people have in such solutions, and so we do intend to issue some guidance on this. I don't think it will be this year. I think it will be in the early part of 2021 that we will look to issue some guidance on that. So I hope that's helpful.
Thank you, Peter. And just a last question for you. Could you please explain some of the ways that the regulator is supporting adoption of RegTech solutions by financial services firms in the region?
Yeah, no problem. I guess there's a number of ways that we're doing that on the basis of, I guess sanction screening is something that's key in relation to when we do a risk assessment, understanding what's actually taken place, how comfortable are we with the controls, what's been the, I guess, false positives, what's the efficiency, how is that information making its way to senior management, and what is sort of the board doing about it. What we've seen with firms globally is having the right RegTech solution for your firm can actually also reduce the potential risk of huge fines that we're seeing firms taking on at the moment, and not only fines that they're taking on, but also costing the CEO and chairman jobs globally as well. So what we're finding is a huge uptick in relation to interest around RegTech, not only around AML, but also just efficiency around what we heard today around onboarding. We also heard about the approach of just interacting with their customers, something as simple as an app and how it talks to the customer and how it keeps them updated and what those interactions look like. So I think that this space has got huge growth, huge capability. You'll never hear a regulator say that we don't want to see huge growth in this, but we also, I guess, want to see a balance. We want to see the ability to leverage off this technology, but also make it safe, because what happens if it's not safe, not only is it going to cost the firm, it's going to cost the regulator, the center, the ecosystem, the market as a whole as well. So I think what we try to do as a regulator is work closely with Salman himself to make sure that we get the right people into the center doing the right things, and that growth will take care of itself. And we've seen that happen over the last 15 years, and we'll continue to make sure that that's a strategy going forward. So I feel there's a huge growth in this space, and it's been seen from a factual perspective, and it's been documented widely as well. Thanks, Vandana.
Thanks, Justin, and very well said, right? The whole point of this event is to show regulatory engagement on the RegTech perspective. So that's about it. There are no more questions. Thank you, Peter. Thanks, Salman, and thanks, Justin. This brings us towards the end of the two-day RegTech live event, and I would like to invite Justin again for the closing remarks. Justin?
Thanks, Vandana. I really appreciate it. So again, thank you everyone for joining us for the 2 days for the RegTech live event. Special thanks to all our speakers for their valuable insights as well. Yesterday, we heard more broadly about the trends in compliance innovation and the impact the pandemic has had, and the focus and pace of the innovation as well. Today, we heard a very informative presentation from the UAE Pass, and also how it helps institutions improve their identity verification process, playing an essential role in achieving a paperless Dubai government in the future. We also heard about innovation in mitigating the risks in payments and some of the challenges in adopting new payment technologies. We saw a couple of different compliance solutions and demonstrations, and we capped the day off with a glimpse into the future of finance from the Difc authority, and as well as from a DFSA perspective, talking about our policies and our supervisory approach regarding innovation as well. It was great to hear how the UAE Pass is leveraging further technology and increasing controls via a new feature, being facial recognition. And it was very interesting to hear from David Rich from Mastercard as well, outlining how fraudsters outlining how fraudsters are adapting quickly to the controls, and then sometimes it's too fast for institutions to catch up. So the challenge going into the future is making sure we're able to balance out the benefits with the actual speed itself of what's taking place. I'll leave you with one final thought. You've heard from us at least twice over the last 2 days, but I'll say it again. It's a really important point in relation to innovation, given that innovation does offer us a great deal of benefit in terms of regulatory compliance and risk management, but we all must remain, I guess, mindful of the risk that innovation does present to us as IT, especially in the areas of cybersecurity, data protection, outsourcing, and third-party vendor risk. As a regulator, we encourage the use of technology in the delivery of financial services, as well as the maintenance of regulatory compliance and risk management. However, we must continually balance the benefits of innovation against our objective to maintain financial stability, which is most important to us. Maintaining the integrity of the market is a key priority, and protecting the users of the financial services as well. So again, I'll stop there. Thanks again for joining us, and I hope you have an enjoyable up and coming weekend. Thanks, everyone.